Hello fellow chartists, welcome to my YouTube channel. I am D Chartist, and today the SPY finally got this beautiful, long-awaited, very healthy pullback. Oh, it was so beautiful. We're definitely going to talk about it, okay? Now, I usually show the flow sentiment, but honestly, it hasn't really been very helpful showing the data at the end of the day. It can be helpful intraday though, so Discord members, if y'all want to check the flow, y'all able to check it. You guys have access, okay? So anyways, I want to start this off with my plan that I wrote this morning at 9:02 a.m. Okay, a little later than usual, but it was before the market, all right? After a 2-week rally, SPY looks like it's in base mode, okay? It's like a way of saying a pullback or something like that, right? Or consolidation. My plan today, supports equal 458, then 456.5 to 456, all right? Bulls don't want to see SPY lose 456 because 456 was a very critical level for me. As long as support holds, upside targets are in play. 459.5 to 460, 462, then 464 to 465, okay? Gotta acknowledge the bullish scenario just in case it happens. If the 456 to 456.5 zone fails, I favor we sell down to the 200-day moving average. Now that is a bold statement. We do have some levels between the 200-day moving average, which I later updated in later posts. Okay, so the levels below 456 was 454 to 453.5. Okay. And I think I talked about that in the video yesterday. And below that is 450, and then below that would be the 200-day moving average, okay? If we lose the 200-day moving average, that's when I would turn back to being bearish and favor new lows, okay? Because as of right now, this could just be a healthy pullback. I would like to see a retest or a back test of the 200-day moving average, though, if I was to be a little biased. But we always want to play it level to level, as I'm about to show you, okay? We talk about this on the 15-minute chart here, and it opened up here, okay? The SPY opened today. Oh, excuse me, looking at the wrong part. Today's March 31st. So we want to look here. The SPY opened today at 457.88, all right? SPY off rip. The SPY opened below our 458 level, okay? So therefore, since it was a support when it was above, now that it's below 458, it is a resistance. So what do I always say? When we lose a support level, we watch for the back test, okay? Does it work 100% of the time, guys? No, it doesn't. But it does work. If you use it properly, it does work more times than it doesn't, okay? So you can see here, around 9:45 candle, around this time, like a little after 9:50, this is when I started looking for trade setups. And right here, it back tested. That orange line is the 458 level. It back tested as a resistance, and then it came and pushed down and bounced right off of the bull flag that I got here, okay? Got this bull flag in the pink line, okay? It came and bounced. So from 458, rejection, down and went as low as 456.57 on this candle right here. So it got pretty close to my 456.5 level before it bounced, okay? Now here's where it got a little tricky. Here, all right? This is, like I said yesterday, concepts like false breakdowns and false breakouts are very important to learn and understand when trading these levels, okay? So here is where it recaptured 458, right? This candle, second candle, closed above 458 and showed a small buying pressure, okay? Red decent body candle, still closed above it though. Technically speaking, 458 was cleared. However, you got to be nimble in this market. Third candle, clearly it closed below and the 458 was lost. Failed to hold, and what is that called? A false breakout. Okay, false breakouts are bearish, and it continued for the next about 45 minutes. For the next 45 minutes after losing 458 again, it back tested that zone as a resistance, failing to close above, guys. Remember, more than one close below is not enough. We want to see follow through. This many closes below and that much selling pressure from that 458 level, it's clear that it was lost. And then we got, boom, around noontime, strong move, strong push to the downside, okay? So what was my support level below 458? 456 to 456.5, and as you can see, it's the 456 level is here at the blue line. As you can see, it just started for the rest of the day after losing 458. Got some dead cat bounces here and there, but it just worked its way down to the next support level until finally, remember, 456 was a critical level because it would trigger a strong sell-off. And as you can see, holy moly, it even crushed right through my 454 to 453.5 level. Crushed right through it. All right. So as long as below 454 to 453.5 resistant zone now, as long as below that zone, I favor we go test 450 and then the 200-day moving average. I'm over here doing analysis on the 15-minute chart. Let me get on the daily here. All right, these lines were all my levels that I was trading. Okay, so here we go. Remove the drawings and we'll do it together all over again. So obviously fib levels, January high down to February lows. All right, got to fix that a little bit. Boom. All right, lost that 61.8 retracement level today with the big body red candle, bearish engulfing candle. That's just a bearish candle, guys. So for me to be bullish again, it needs to recapture the 61.8 retracement level, okay? If it doesn't recapture that, I don't even want to hear nothing bullish about the SPY right now, okay? At least not until it go test the support level, that is. If it does recapture, then upside targets are back in play, obviously. 456, then 458, and then 459.5 to 460, and so on. Okay? But as long as we are below it, I am bearish. Why? Because we lost a critical support level. What do we do when we lose a critical support level? We watch for the back test. So tomorrow, I will be watching for the back test because we need to see follow through, okay? If it goes and retests 453.5 to 454 zone tomorrow, and it rejects, strong rejection, 450 is in play. The 200-day moving average, the pink line right there, currently around 447.27, that is in play. And if that fails, 445.3 is back in play. That's the 50% retracement level. And below that is the 50-day moving average around 440. Okay, guys? So we're going to keep it just that simple. Back test and go will be the strategy we will try tomorrow. If it opens below 454 and back test that level and reject, bearish. But we got to acknowledge the possibility of a false breakdown, okay? We got to, because, market makers like to trick us out, guys. You guys know this. If we recapture 454, guys, that's a false breakdown scenario. Just like false breakouts are bullish, because right now we got a false breakout right here. Okay? We got a false breakout. We took out that 61.8 retracement level back in March 28, and we closed back below. Watch for that back test. Rejection, bearish. Recapture, bullish. We'll keep it that simple, okay, guys? So, hope you guys understand the strategy for tomorrow, okay? But let's take a look at the VIX. And will you look at that? Very interesting, okay? So, VIX needed to cool down. It was very oversold. This is why we don't just buy when something just goes oversold. Because March 24th all the way until, well, today, the VIX was oversold. Okay, now it's finally out of oversold territory. Okay, so just because something is oversold or overbought don't mean it's a buy or sell signal. It's just a condition. All right? So as you can see here, it recaptured the low of February 9th. Okay, 19.93 was the level. It recaptured that. Also closed above the 5-day moving average at 19.85. That's a good sign. It back tested the 200-day moving average. It did not close above it though. So we want to be careful here. It did not recapture the 200-day moving average. 200-day moving average at 20.73. If VIX get above 20.73, I'd be a little more bullish. Okay? Because when it goes up, you got to take the stairways up. Okay? This is a win for the VIX bulls. For the VIX bulls, they get a win because they closed above February 9th low. and they close above the 5-day moving average. So tomorrow, the VIX, if you're a bullish on the VIX, you want to see the VIX keep climbing that stairway up to and recapture the 200-day moving average. Above 20.73, puts 22.8 in play, then 23.7 in play. Okay, those are the next upside targets for VIX if it continue to go back up. Okay, if it loses 19.9 or it loses the 5-day moving average, that's bearish, guys. Next support is down to 7, is at 17.4, then 15.7. Okay, so remember the SPY inverses the VIX. They inverse each other. So if the VIX is above 20.73 and is looking bullish, most likely the SPY could look for more downside. Okay, so I hope you guys understand the plan. Try to keep it as simple as I can. All right, that was. I'm a father of 4, guys. I got dad jokes sometimes. Dad joke for days. Triple Q here, and it also lost a very critical support level. Closed below the 5-day moving average, currently at 365, but also lost the 50-day. The 50% retracement level at 363.4. Okay, so like the SPY, we're gonna watch for the recap. I'm off today. We're gonna watch for the back test. It's only a recapture if it can close back above 363.4. Okay, and that would be bullish, by the way. False breakdown scenario. If it rejects, that's a strong, that's a strong warning that we're gonna head down lower. Okay, next support is around 354 to 355 zone, then 352.64. That's a 38.2 retracement level. Very critical level there. Okay, so we'll keep it simple. If it recaptures 363.42, if it goes back above, that's bullish. Okay, if it rejects there, that's bearish. Just play it. Let the price action guide you. Okay, guys. Dow Jones, nice big body, red candle. All right. Lost the 200-day moving average. All right. So watch for the back test tomorrow. 200 days at 350. If it back tests it, strong rejection, more downside. If it clears it, recaptures, that's false breakdown scenario. Possibly more upside. Okay. 351.6 will be back in play. And then 354. Then 358 and so on. Okay, guys? So, yeah, the strategy is pretty much the same for all of them so far. IWM here. Let's see. IWM. Okay, so IWM is a little different. It lost the 5-day moving average. It closed just a little above the 13-day moving average. That's that green line right here. Let me change the trend line. Don't get confused. Okay. That 13-day, that green line, that's a 13-day moving average. Okay, so it's currently at 205.3. If that fails, I favor we test 201.43. That's the next support below 23.6 retracement level. If that fails, I'm going back to bearish. That's the false breakdown of this white trend line. Okay, multi-month white trend line. False breakout. False breakouts are bearish. Apple, finally, right? Seriously, finally. Look at that nice big red body candle. Finally got the pullback. Very nice. I'm not bearish or bullish, guys. Don't get it twisted here. I just like price action to be healthy. That's all I'm saying. So, for me to be bullish, okay, resistance now is at 176 to 177. That's the green zone here. Just like with the others, we want to see a back test. Rejection, bearish. Enter a put. Maybe. Up to you. If it recaptures, that's bullish. Enter a call. Okay? If you enter the put, cut your loss, enter a call. You got to be nimble in this market. Okay? So just let the price action guide you. But I'm going to keep it real simple. Above 177, bullish. Below 176, bearish. Alright? If it's bearish, next price target is at, let me see, 174. I kind of tested it today. So, but if 174 fails, then 168 to 169 is next. That's this yellow trend line. Okay? The yellow trend line of the bull flag, multi-month trend line. And if we go below 168, false breakout, best time to turn bearish. Catch that, ride that wave down, okay? And Tesla, nice low pullback here. It came right down to the 5-day moving average. Some way, somehow managed to close above. So it's healthy pullback, not too bearish though. Need to lose that 5-day moving average. Currently at 1,074.7. Below 1,074.7, or it'll change tomorrow. Watch your charts, set up your 5-day moving average, and check it. If it's below the 5-day moving average, that'll put 1,036.4 in play. That's a 61.8 retracement level. Bulls need to hold that. If it fails, that could trigger another big sell-off. Okay, another big sell-off down to 972, possibly. That's a 50% retracement level. We'll see. Okay, but if 1,036 get tested and it holds, you could still get another crack at that 1128 level. Okay, not gonna be that simple, obviously, but we'll see. Okay, keep it simple. Below the 5-day moving average, bearish. 1,036 incoming. That fails, 972. All right. If it continues to hold or chop, that favors more upside up to 1128. And look at Bitcoin. Could it even break past the 200-day moving average, coming back and testing the multi-year trend line over here around 45 points. Let me see, 45.4K. So remember, below 45.4K, we lose the multi-year trend line again. Could backtest the triangle pattern. Support's currently at 44.4K. All right, below 44.4K, definitely switching back to bearish. That's a false breakout. Okay, guys, so that's all I have for you guys today. I hope you guys had a great trading day, and I hope you guys found some value in this video. Thank you guys so much for watching. See you all soon.